Hello, it's Ellen here. Today I'm going to walk you through another comparison between the lump sum strategy versus the dollar cost averaging strategy for investing in TQQQ, a leveraged ETF, tracking 3 times the daily return of QQQ, the Nasdaq 100 index. In my last video, I compared 3 strategies of investing in TQQQ for the long term over a 15-year period from 2010 to 2025. And some of you commentators have suggested that it would be interesting to see the comparison of returns if there wasn't such a huge difference in the starting amount being invested. In the last video for the lump sum strategy, I assumed the investor would put in $18,800 in 2010 and hold it for 15 years, whereas for dollar cost averaging, the investor would put in $100 every month over a whole 15-year period, amounting to $18,800 in total. Although the initial amounts wouldn't make a difference, when you compare the returns in percentage terms between the strategies, in terms of the absolute dollar amount being returned, there is a large difference. By the way, if you haven't watched the last video, you can check it out right over here. So today I'm going to show you with the same time horizon, March 2010 to October 2025, what would generate the equivalent returns in absolute dollar amount terms between the lump sum strategy and the dollar cost averaging strategy. That would then give you another angle to compare the 2 strategies from. So without further ado, let's get started. Okay, so as you can see here, I have adapted the previous spreadsheet a little. So now you can see the lump sum strategy versus the dollar cost averaging strategy invested from 1st of March 2010 all the way to 17th of October 2025. So in the previous video, we started with $18,800 invested from the beginning of this period as a lump sum, and then held it to 17th of October 2025. For the lump sum strategy, you would end up with almost $4 million. However, if you invested $100 per month over the whole period of time of about 15 years, you would have invested $18,800 in total through the dollar cost averaging strategy. However, your profit in the end would be about $688,000. So there was a huge difference in terms of the absolute dollar amount returns. However, some of you have commented that this isn't a fair comparison because the starting amount is too vastly different. So of course you would end up with more. I just wanted to clarify that in percentage terms, the comparison would remain the same regardless of how much you invest in each strategy. So if you look at the percentage returns for lump sum strategy over this period of time, you would end up with about 21,122% in terms of your profit versus 3,660% for the dollar cost averaging strategy. So that is a huge difference. That percentage doesn't change. As you can see here, if I change the starting amount for the lump sum strategy to $100, you would end up with the same percentage of returns. It doesn't matter. However, I promised you in this video we'll find out what would be the amount to be invested as a lump sum that would be equivalent to the dollar cost averaging strategy with $100 per month. So I haven't changed anything with the dollar cost averaging amount. So you still put in $100 per month for the whole of 188 months. Throughout the period, you still end up investing $18,800 through DCA and end up with $688,000 in profit. So let's find out how much would you need to invest as a lump sum at the beginning of this 15 years in order to achieve the same profit, i.e. $688,000. What I have found out was that you may have seen it at the beginning already, since it was a little bit of a giveaway. If you had invested in 3,300, you see the graph has changed. Now the two lines are matching, meaning the profit is almost exactly the same throughout this whole period. If you put in $3,300 from the very beginning and leave it for 15 years, by the time 17th of October comes, you would end up with a little bit more, so $697,000 in profit. And as you know, the percentage terms is still about 21,000%. But now the profit is the same as investing $18,800 in a drip feed fashion, so $100 per month over this whole 15-year period. So now you know $3,300 is the point where the lump sum strategy will start overtaking dollar cost averaging strategy in terms of the absolute dollar amount return. Let's have a look at a few more figures. And again, if you wanted a copy of this spreadsheet, you can request it in the comment, and I will also leave a link down below in the description so that you can input your own figures to have a play around with the projections to compare the two strategies. So for example, if you just put in $1,200 as a lump sum, that means a year's worth of dollar cost averaging amount. That would give you $253,469 in profit after 15 years. And similarly, if say you put in 4 years worth of dollar cost averaging amount, so $4,800 from the beginning, then with the lump sum strategy, you would end up with over $1 million in terms of profit. So that's pretty good. As I mentioned, the percentage return doesn't change. It remains the same. So it really is a simple maths. If you have stayed in the market for this time period, whatever you put in at the beginning, you would end up with about 211 times more. However, if you get a copy of this spreadsheet yourself, you will be able to see the changes in the profit or loss, both in percentage terms and in dollar amount terms throughout this whole time, as well as the comparison of dollar amount profit as well as percentage profit. And there's also a price chart as well in the end, which I've added. So, what do you think? How does it feel knowing that if you had just invested $3,300 at the beginning and held onto it for 15 years, you would get the same amount of profit to if you had invested $18,800, and you would have to maintain that strategy and be disciplined with investing $100 every single month. And throughout this 15-year period, there would have been a lot of ups and downs in the market, but all you've had to do was to stay put and do nothing and let the market do its own thing. So a very low maintenance strategy. All the effort that's required is your psychological effort. So how to stay calm when everybody else is panicking or hyped about the next new thing in the market, when you just stay put and stick with your conviction and your strategy. Let me know what you think down below in the comment section. As a heads up, and a little teaser, next time I'm going to show you comparisons of the lump sum strategy and the dollar cost averaging strategy for TQQQ at different stressful market environments in real life over the last 5 to 6 years, including the COVID crash and the market downfalls in 2021 and 2024. So if you're interested, stay tuned and I will be with you soon. That's it for today. Thank you so much for watching. If you find it useful, please hit the like button and subscribe to my channel for more videos like this. And as always, leave a comment if you have questions or opinions you'd like to express, and share this video with anybody who you think would benefit from its content. It really helps me grow my channel. Thanks again for being here. I'll see you next time. Bye for now.